Tuesday evening, peoples. Let's get started. I know you guys are probably wondering, where's Bruce? I got a lot of comments. And like I said, I'm slowing down on my Yieldmax coverage. I'm going to cover a lot more funds. I'm going to talk about sectors. I'm going to talk about the market. Less focus on Yieldmax. I still will do Misty, and I'll probably do Tesla and maybe NVIDIA. And those will be two or three that I do. But as most of you know, I'm moving away from Yieldmax personally. So I'll be dumping all in the next couple of days as the market will get very, very vulnerable in October. Got a video coming out about how I see everything playing out. So just a heads up on that warning. But for now, let's just jump in here to Misty. Okay, don't blindly follow anybody into these funds. If you like them, watch my videos to see how they're doing. You don't have to take my opinion about the markets, but I'm going to provide it. And I'm also going to tell you where I think it's going to be safer over the ensuing years, because this could get really ugly in the markets. I'm not talking about a 5 or 10% pullback. I'm talking potentially about a 13-month, 50% pullback in the indexes. Again, just watch my video. Um, I'm not a perma bear by any means. I try to keep it real, people. You can do what you want. You can chase yield and all those kinds of things, only to find out later, boy, I wish I would have done this, or I wish I would have done that. So, you know, um, for what it's worth. Okay, here we go. So what happened yesterday? Well, 23.8 for Misty. So clearly we're bouncing, okay, on the charts of BTC. And that's positive. Let me pull up a chart separately. Current BTC price on my other monitor. Okay, let me get it into US dollars. Okay, 64,394. Most of you know that, right? Okay, we got up to 64.6. So it's trending up. Anything above 63, really 62, we're in that upper zone. I could see us getting to 68 and maybe stalling, but watch my other video where I think the markets are going. I'll give you some idea of individual sectors, S&P, Dow, Bitcoin, gold, other kinds of things. Okay. So anyway, what did MSTR do? Well, MSTR went up 2.61 while we went up 2. Why? Because we're beginning to be capped. Depends on now. Since I've started covering this, I talked to you guys a lot about the spreads that were coming, and I'm going to go a little more in depth on those, how they work and so forth for this video, because no other YouTubers are really doing that. And if they are, they're probably doing all spreads and not doing as sophisticated tracking of the overall stuff. So try and do a blend here so you guys can see how the fund is doing and how the fund managers are managing the fund, right, with your money. So let's recap what kind of trades were put on last Friday, because no new trades happened on Monday or Tuesday. So this is, Tuesday evening, late, wherever you are in the world. It could be Wednesday in a lot of places, but Tuesday evening on the East Coast, dinner time evening on the West Coast. So with these trades, this one is insignificant, right? 200 contracts. This one, and it's 143, so that thing is massively capped. When we go over to holdings, you'll see what I mean. And then this one, they collected $2.67 out at 155. Well, we closed almost to 154. So this one's in danger. Although we could pull back a little, this week is positive. Okay, so how I look at the overall market, we're likely on the indexes. Again, this isn't BTC, it isn't gold, it isn't something else, but very likely on the S&P, we get a high on 9:30, okay, which is next Monday. So that's kind of a peak. Now, we may have an intraday higher, but it's very likely that 9:30 will be the high close, okay, for the indexes, especially the S&P. So that means that on the October, the rest of that week, October 1 and so forth, you could very well see intraday highs, but start a decline. And remember how I had done the prognosis of saying that I think we rally somewhere around 15 trading days after the 18th. Well, we're 5 trading days in, right? So that's why I give this a little bit of room, but we're very close to a top. So, what do the smart institutional monies do? They want to lure in. They can still run these markets up a little bit, suck in the rest of the general public and everybody feeling good, and then they sell off all their remainder. And then all of a sudden the market tanks, right? All it takes is a couple of ugly 7% in an index average, even 4%, and panic and margin calls happen, and all of a sudden that selling escalates. That's what I see in October. And it could go on for 2, 3, 6, 9, 13 months. Now, nothing goes in one direction. We could have a 15% pullback in the S&P 500, say in October, 18%. Then we could turn around and bounce half of that, 50% retrace from the bottom of that, only to have another down wave. So just understand how these markets work. And that's what's at stake, right? And I'm kind of glad we got this rally because there were a few things I wanted to finish getting rid of. So I've got market orders in for those, and those probably should go off Wednesday or Thursday. But I still, and that doesn't mean that we don't pull back slightly Wednesday and Thursday and run up Friday, Monday, Tuesday, right? Um, so what I'm giving you is not an exact, but I think it's pretty close to what we're going to witness. And there's a lot of ugliness in the world. I don't have to tell you guys that, with war threats and disease and famine and what's the word I'm looking for? Droughts, right? With lack of water and heat. So yeah, and then I didn't even mention hurricanes, right, that are coming through this weekend in the States, are already there. I haven't kept up with it just recently. So a lot of things going on. Let me finish on this. Okay, guys. So and then here are the spreads. Sorry, I'm mixing and leading into some of the things I'm going to talk about in my market video, but all the while it affects this, right? I could easily see us hitting 24, maybe mid 24s here before the rug gets pulled out from under MSTR and Misty. Okay, because I think when the markets pull back, almost everything goes back. I'm still holding my VIX. I'm out of my calls, but I'm holding UVIX because, it's in the fours now, people. If you want to buy something to protect yourself, that thing could go to 20, 40, 60, right? From $4. Maybe it only goes to 20, but from 4 to 20, that's a nice return. For me, buying calls on other ones, just, with calls, you always have to be right in the date, unless you're willing to go out 6 months and then you pay more for the premium. So, but my gut says October is coming, and it's coming quickly, and that's when we're going to see the destruction in the markets. Okay, so following up, here are our two 150 and 160 call spread. So how do these things work? Okay, so that nature, remember, everybody says, oh, this is a savior for not getting capped. Yes and no. In general, when you put spread strategies on, in addition to just selling your naked calls, this is just a naked call being sold, right? So they sold 200 at 143. They're getting killed. They're losing 3 or 4 times their money, but at 200 contracts is minimum. This one is at 155, and it looked pretty good when it got put on. It doesn't, it was 7% out of the money. Right now, it's 2% out of the money, right? 155 to 154. I'll go over them weekly in a minute and let you see that. But that could get ugly quickly. Now, how does the spread save you? Well, it saves you when it works and it loses when it doesn't. So I know that sounds simplistic. Let's take just a single naked call and go over that again. So here's your 155. Okay. So what do we want to happen when we sell this naked call, the traditional method? And what is the danger? Well, we want it to not get to above 155. So we sold it for 155 for this week, last Friday. So we want on 9/27 this to be 155 or under. And we get to collect and keep. We already collected. We get to keep 4.4 million, right? Nice little gain for the fund. What happens when it goes to 156? Well, we sold it for 267. So that's $1 back, right? That money starts to go up very quickly. So we got $2.67. So when it's at 157.67, we've lost all of our 4.4 million. Okay. But we haven't lost anything additional, but you give it and you take it. So it's like we put no call on for the week, right? Goes to 157, we have to give all the money back. If it goes to 158, 159, now we start losing more than we ever collected. And that's called capping, right? It's capping as it goes above 155, but since we collected $2.67, we add that to 155 and we go here to break even, right? We don't win, we don't lose. But technically, I look at it, we lost the money we collected, okay? But no additional money. So what, okay, so when you put on a spread, that's how your naked calls work. You hear the word capping. So they're saying, hey, we do this spread, and now we magically can participate in the upside more beyond. Well, yes and no, right? Again, you got to thread the needle, the yin and yang. So here's your 150 call. They got $4.25. So they sold this just kind of like a naked call. And then they got by calling it a call spread, they buy the 160. $10 above it. So if this thing goes to, let's make up a scenario. First off, if it goes to 175, this thing is destroyed, right? This guy here, you will lose both of these, although this is minuscule. So if it goes to 175, you have $2.67, but you have to pay $20. So you lost $18 on every one of these contracts, which is just enormous, right? But over here, this guy is losing, but all of a sudden, so the worst thing that can happen to this call spread is that we close between these numbers. Ideally, what you want to happen, you got $4.25. So you want it to finish in this, just this call spread. And it'll be okay for this too. You want it to finish at 150. If it finishes at 150, you keep this 7 million. Now you sold those, collected the 7 million, and now you don't really have to buy them back except for a few pennies. But you lose $1.65. So you lose 2.7 million of the 7.1 million. But hey, you still collected 4 million, right? 4.4 million. Almost similar to this guy, right? So then you would have at 150, you would have 8 million collected here in total, even though you spent 2.7 on this. So you could say, Bruce, why did they even buy that then? Well, they buy that if it's going to go like to 165, 170. They start to participate again in the upside. but it's got to go to 161.65, right? The 160 plus, it's got to go to 161.65 before they even start to participate. Okay, and then this guy gets destroyed. So it's a game, right? I mean, to me, if you're going to do a call spread, just do a call spread. Don't even do these guys, right? So the worst thing it can do is the very worst is land at 160, because then you don't get anything. You don't. It's just bad, right? Because you bought it, it expires worthless, and this loses $10 because you only got 425. So all of a sudden, so anyway, there's a whole lot of scenarios. So just a call spread alone isn't so bad. I don't particularly like this $10 gap range. I think it ought to be a $5. Now, obviously, they like the pricing better, right? They're trying to be cheap and pay the least here and collect the most, but they're also putting themselves in an improbable position. So that's my take. Call spreads can be done, but when you mix them with a naked call and then stagger it way different, ladder it, a 143 and a 155, I mean, that makes no sense. The reason we know this is a call spread is because they're both the same amount of contract. So anyway, that for what it's worth, what the best thing that's happening to them and the only savior here is right now, the last week or two, we've been in a bull market in Bitcoin. Okay. So let's jump over to the weeklies and let me show you. And then I'll get into the synthetic. There were no trades on Monday or Tuesday. So here's our call spread. And I'm going to show you exactly what this is worth, how much it's made, how much it's lost, and then I'm going to take you through the synthetic. This is the more traditional, just weekly calls. These are spread calls. All have the same expiration date. I color-coded them differently. So you can see this guy's blown past it 7%. So that's ugly, but small amount of contract. This guy's got a little bit of room left, right? We're at 153.88. And again, it could go up a little tomorrow and then by Friday come back and close below 155 and we win all that money here. This guy's toast, but 200 contracts is almost meaningless. This one, you really want it at 150 or below or above 161.65. That's the ideal situation here, although that doesn't even win for you because I don't, at 170, you would make up, I think, any loss here. But I'm not, I'd have to do the math just to see. I really don't like the $10 gap range. It'd be much easier if they did $2 to $5. But obviously, they don't like the pricing. So they would have to give a larger percentage of their money, but I'm not sure how they think this wins. I need to really just do the math on the outcome and see. But that's what we got, people. Sorry for the long detail, but otherwise, this is meaningless to you guys if you don't really understand what these things do and how they work. All right, so let's go over to holdings. That's kind of key. This is my traditional, but I changed it up a little bit. Okay, so the best thing that's going is we've got this synthetic at 140, and here we are at 153.88. So what happens? A synthetic is a pure long play, peoples. So right now, we have 47.6 million gain, or $2.13 that we could sell it for. Again, it's not completed, right? It's not like these weekly calls and everything where once you spend the money or you sell it, it's collected, right? You still have a liability coming. This guy just sets until you sell it because it's out till October 18th, people. Okay, on this 140. At least I think that's right. I need to double check. This one might be out later, but I think it's still October 18th. But it's clearly October, and then November is the new date that some of the funds are going to. Okay, but here's our other summary. Here's our weekly calls broken into two groups, right? Because this one's our call spread, and this is our true naked weekly calls. So I analyze these. I say you got 47 million in your. I used to do this over here on the payout tab. I'm doing it here now because there's just so many more things, and look at the math involved here. It's a lot more formulas, right? I have to go out and account for the spread and multiple values. So the net result as of Tuesday close is we're losing 6.5 million, right? So that takes us from 47 to 41, our net. And none of these are completed, right? These will be completed as of 9/27. So what is that per share? So instead of having a $2.13 gain, we have $1.84. So that's, Misty's looking good this week. But again, what I told you in the overall market, what about 1, 2, and 3 weeks out? It could be pretty ugly. But again, maybe this thing runs. Remember, I said I would give 25 days, 15 to 25 days of a 7-ish% move up in the general markets after the Fed announcement. And then our potential over the next 13, 15 months after that run up is as much as a 50% retrace. It doesn't mean that it retraces 50%, but I'm talking indexes here, peoples. I'm talking about that's how bad it could be. Maybe it's only a 20 or 25% retrace. But guys, one thing you got to know about being in these income funds, there's no way for them to do well if your underlying and your overall stock market is going down. So even you guys out on Round Hill and Chase Weeklies and all that, if you're in the NASDAQ and the S&P 500, that is what kind of potential. Okay, where would I still tell somebody to keep buying and stay in those? When they got a 10, 15, and 20-year horizon. If you're working and you got a 401k, and I'm telling you over the next 13 to 18 months, we could get a 20 to 50% correction in the Dow and the S&P. That's how ugly it could get. Hey, DCA, you got a 10, 15, 20-year horizon. You'll be okay. For somebody like me who's older and I just want to win all the time and not lose a lot, I'm going to play sectors. But even my favorite sector in commodities, that's going to get beat up when the market starts to pull back aggressively. Everything's going to go down, everything called stocks, except for something like a volatility index or an interest index or something. But general stocks are going to go down, peoples. Okay. So I know this is long in the tooth. Let me finish now. So all I did was summarize the naked calls and these. Let's go over. I did come through and update this. So we closed at 2380. What's fair value? 2377. So remember me talking about the synthetic? I made sure to update for the last 4 days. So a steady increase in Bitcoin because the synthetic is long on our 140 and we're at 153. We're doing well, doing very well, people. So overall, I see $1.50, $1.80 based on what I'm seeing right now. I just don't know when the markets turn down. Probably that first week of October, you're probably okay. Because remember, I said the high on the indexes might be 930, but that doesn't mean we fall off a lot in the following week. We might be down 0.5% for the whole week. It's just the week after that and the week after that, right? We got 3 or 4 more weeks in October for this 5-8%, whatever downdraft we get from the top in October that very likely continues much greater over time. So that's what I got for you, peoples. Let's go and look at the payout. This is the final part. We're losing, right? But we're only losing 27 cents on total income, and the short call is down 33. Well, our synthetic has got, almost, what did I say, 41 million. So right there is what, $1.84 minus 33, or sorry, minus 27. So we're in that $1.50 range there, people. Probably $1.57 right now in value. Okay. So Misty is doing pretty well. And you can see from the bounce off the price, you people that have bought it at 19, congrats. You guys that are going to hold it for 10 years, hang in there. I love BTC. I think it goes to the moon over the next multiple years. And I feel the same about gold and certain other commodity sectors, but it's also going to be fighting a negative market. I mean, I think the indexes, the S&P over the next 8 years, is probably got a double in it. But think about that. That's 8% maybe compounded a year. But that doesn't mean it doesn't go down 40% in the next 13 months. So, it's all about these averages. Everybody who thinks that it's just going up 12% every year, it doesn't work that way. It's up over a lot more than 12% for the year right now. It may end up on the year down for the year. Who knows? I'd have to look at that chart. All right, peoples, that's what I got for you. I'm going to cover a few of these funds on Yieldmax. I'm going to do my round hill. I'm going to do some Defiance. I'm going to do some general market. I'm going to tell you what I'm buying. I'm going to talk about commodity sector and what I think has the most value. Because one of the things you want to do when this market drops 10, 15%, if you dive into the wrong sectors and the market continues down 40%, in some areas you're going to get destroyed. And if you're on margin, you'll get destroyed on that first 15% pullback. So you got to know what to own in these markets over the next turbulent few years, peoples. Okay, this is Bruce with Targeted Wealth Creation. I'm not a financial advisor. This is not financial advice. This is for entertainment only. Okay, peoples, bye for now. Bye.